So why did we get mashed like this? Because a rate cut is not responsive. It does next to nothing to deal with the illnesses, cancellations, and economic fallout from this epidemic. And I'm beginning to feel, just in what the conferences that have just been canceled and the emails I get and the notes from different companies, that this is a complete shutdown. We're all going to hide? See, the problem here is that we have a public health crisis that could do real damage to vast swaths of the economy. A rate cut doesn't change that. It's not a cure. It's not a better ventilator or a hazmat suit or a respirator. It can't sterilize surfaces. It does absolutely nothing to impact the spread of the virus. So who cares? Well, Fed Chief Jay Powell told us we should. He said it could somehow boost business confidence. Hey, buddy, business confidence, not the problem here. The thing is, I did care about this rate cut. I cared about how wrong it was. When the market flew up on the news, I was incredulous. I was wondering when it happened. I said it was totally a sign of panic from the Fed and a sign that this epidemic is going to be very bad for our economy. Or else they wouldn't have done an emergency rate cut, let alone an emergency 50 basis point rate cut, double what it had to be. You think Jay Powell would slash rates like this if he weren't terrified of a big spike in unemployment? Oh, and how bizarre is it to hear that business is strong in the same few minutes of announcing a gigantic rate cut? Sure. Now listen, I say this as someone who's been adamant that easy money is a good thing. I am probably the biggest single proponent of lower interest rates on the entire spectrum of TV, internet, anywhere. In 2007, I led the charge for the Fed to cut rates. That's when I screamed, they know nothing. They know nothing. They know nothing. They know nothing about real business, and the banks are in real trouble. In response, they literally laughed at me at the next Fed meeting. It's in the minutes. In the minutes that I wanted rate cuts. Then in 2018, I castigated Jay Powell. I've known for a long time. I liked the guy. I castigated him because he kept raising them when I said you got to lower them, and then boom, it almost caused a recession. I was begging for rate cuts when he was tightening, for heaven's sake. When it comes to monetary policy, I'm a dove. I love low rates. So it may come as a shock when I say that I didn't want this emergency rate cut. I didn't want it because it does nothing to help end. And in the process, what does it do? It spooked the most important market there is. No, not the stock market. It spooked the bond market. When the yield of the benchmark 10-year Treasury dipped below 1% today, that was all she wrote for stocks, which are closely linked to the bond market right now. Remember the connection. Long-term interest rates plummet like this because of a slowdown in economic activity. There's no demand for loans. Also because there's a flight to quality when investors buying bonds is a safe place to hide their money because they're so darn frightened. The Fed's actions today told you that they expect a gigantic cessation of economic activity. And now I think there's going to be one, too. They may not want you to be afraid. They may have thought they were bolstering business confidence, but they did the opposite. And when you're afraid, you sell stocks. They're too risky, even the best ones with high dividends. The rally in bonds that sent their yields plunging has really spooked me. Me, and I've been around a long time. Are we actually going to get to negative rates where savers would be hurt? We don't want negative rates, for heaven's sake. I told you again and again, lower bond yields equals lower stock prices.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.